Hello, everybody. I'm Peter Grant with Zaner Metals in Denver. This is This Week in Metals. My colleague, Peter Thomas, is with me as always. What do you know, Pete?
I know that it has been a big week, a lot of very significant numbers, a lot of heavy trade, and we got a lot of stuff to cover. So why don't we just dig right in? What do you want to start with, brother?
Let's start with gold. Uh,
Okay.
it ended last week down 0.4%. So just down fractionally. More importantly, it was
Yeah,
up 3.5% for the month of April. And it was the first higher monthly close of the year. So
that's very
that's
interesting. That's
encouraging.
very interesting. Yeah, because we have seen sell-offs right towards the end of the month, and you and I have both felt that it's fun profit taking. And it seems to me that this is the first time we haven't seen that. So, all said, we saw 37% increase in sales of gold. So it makes sense. And Goldman came out today and said, "Hey, we're looking for gold to go above $2,000 in the next 6 months." So lots of bullish stuff going on in that market.
Well, except for the fact that
Mm,
there's no bullish stuff going on in the price, when we broke out and confirmed the double bottom in
yeah,
gold
right.
4 weeks ago,
Oh, it's
the
not moving fast enough
expectation
for you? I
was that
see.
we'd at least go to 1828, 1833,
Mhm.
based on a measuring objective and a retracement objective. We couldn't even get above 1800 bucks. And so it's sort of been languishing in this range, and it's sort of disappointing for the
Well,
technician in me.
well, I know it's a technician, but let me help as a trader. When momentum slows down and then stays in a zone for a while, a lot of us old timers refer to it as building a base. And if in fact that's what we're doing, and we're looking for something to firm up and hang on to start a new leg up, and we have big players like Goldman stepping up, going, "Hey, this thing's got another couple $100 in it to the upside here." I like that.
Yeah.
I'm down not in that big a rush, but it's not Palladium, okay?
Yeah, I still like the market based on the fundamentals.
Yeah, me
My
too.
suggestion, I think I said last week that we could drop down to like 1740, 1730 before we see renewed buying interest in gold. And we got, I think, down to 1756
Yeah,
towards the end of last week. May
and
have a
then
little bit more
India,
downside.
India, and Hong Kong came in like rabid jackals and just started buying everything that wasn't nailed down. So, from our side, the physical dealer side, not from the technical side, I mean, we're seeing a lot of demand.
Yeah, speaking of the physical side,
Hmm.
the World Gold Council came out with their
Good
demand
source.
trends for Q1,
Yeah,
and
I saw them.
overall demand was down 23% in the first quarter, largely because of ETF outflows and sort of a pause in central bank buying. But we did see some bright spots on the physical side.
Right.
Bar and coin demand was up 36% year over
Thank you.
year
Yep.
to 339 and a half tons. That's a good number.
That's a good number.
Jewelry demand was up 52% year over year to 477 tons. Again, good numbers. I think again, we've talked about this in the past, that when
Sure.
the selling in the paper market provides the opportunity for physical buyers to get a lower price, jump on it, and that's apparently what was happening
Yeah.
in Q1.
Oh, and I tell you something. We had COVID came in with a vengeance into India. Our hearts and prayers go out to you guys. We know that the next numbers we see out of India are going to be very low. They were held back on their wedding season, which is usually a big time. We see a lot of consumption of metal going out, and they were able to buy, which I think contributed to that, Pete. But
Yeah.
right now, I think we're going to see a dent in that number coming out of India. But China's here and China is playing big time and they are buying in large numbers. So on the physical side, not on the paper side, we're seeing good demand.
Right.
Yeah.
Worth noting that Fed policy came out last week as well. They held steady as was widely
What a
expected,
shock.
but they did, mention take note of the fact that the U.S. economy was strengthening, but they're inclined to maintain accommodations until we reach maximum employment and that 2% inflation objective, and they're prepared to let it go above the 2%
You don't have a choice.
inflation objective. Worth noting that the Fed's preferred measure of inflation did in fact exceed 2.2% in March. The PCE, the chain price index,
Right.
uh, came in at 2.3%,
Okay.
which was up from 1.5% in the previous month. So that's a pretty hefty month-on-month jump.
Yeah, it sure
Um,
is.
even core PCE chain price rose from 1.4% to 1.8%. So the inflation they got, now here comes the question of how far above the 2% target are they going to let it go in order to, with the focus on now on maximum employment.
Hmm.
So I think that we're going to see a lot more of the inflation before we see the maximum employment, because arguably, and I wrote this in my newsletter this week,
Okay.
maximum
That's
employment
Branton
is,
Gold, by the way, guys. Yeah.
yeah, maximum employment is now arguably 3.5%,
Okay.
which was the unemployment rate in January of last year, right before COVID hit.
Yeah.
So, the economy was going gangbusters. Everybody
Yeah,
who
sure
wanted to
was.
work was working basically.
Yeah.
So I would say 3.5%, you fudge it maybe to 4% is now maximum employment. But market expectations for non-farm payrolls this week for unemployment is 5.8%, down from 6.0% in March.
Okay.
So we got a ways to go before
Yeah.
we get, even to the 4% level, let alone three
We-
and a
we-
half
Yeah.
percent.
Well, it'll
So
be interesting to
foot
see
on
if
the
you can
gas.
print. You can see if you can print your way into full employment when you're paying people not to work. It's an interesting concept. We'll have to see how it works.
Yeah. So that's the game the Fed was talking. There was some scuttlebutt going around that people were making a bet that some kind of taper would be announced around the Jackson Hole
Yeah.
Economic Forum in August, and that's based on some positioning in some rather significant positioning in Eurodollar futures that seemed to be a bet on tighter Fed policy later in the summer. Whether
Yeah.
that's true or not, I don't know. But the bond market, you know, seems to be taking note of it, and yields were back on the rise, late last week. That pulled the dollar up late in the week as well, which has kind of been a bit of a headwind for gold.
Okay. Hey, listen, saw some interesting numbers on silver. US Mint gave us their final tally of the fact that they sold 30 million silver eagles last year, which I thought was interesting because that's about double of what they did before. And they're talking about the last projection was they were at 13 million, but I took a look at the projections of their sales, and on March 12th to March 13th alone, they sold 1 million Eagles. So in 2 days, if they're doing 1 million, last time I looked, there's 365 days in the year, and demand is going up by almost 100%. I think we're going to run out of silver.
You know what's startling though is that they're selling volume like that at premiums that we've never seen
Never
before.
seen before. No.
And it's reflective, I think, of the market's expectation that the price is going to go significantly higher.
It's
And
not even a
and
question.
we've talked about this before. The the,
Yeah.
the the only way you're going to get premium relief is if the price goes up. So it's pay me
And
now or
I'll
pay me
tell you
later,
what,
right?
I don't even buy into that, even though that is an existing theory. If you remember, I was one of the guys that was there pushing silver all the way to 50, and people didn't care about it. I remember people coming in paying a $10 premium on stuff, and they could care less because it was going higher. So I think that that's going to be the prevailing attitude. I listened to probably one of the best authorities in metal this morning, Chairman Moy, retired chairman from the USMint, great guy. And he said, look, he goes, try to buy a gold eagle right now for under $2,000. He goes, best of luck. He goes, right now we're seeing demand is just outstripping everything that we can produce at the U.S. Mint. So he was the former mint head, and he knows his stuff, and he's saying demand is going to continue to push these premiums higher, Pete.
Yeah, and the fundamentals, continue to look really strong for silver,
Yeah,
based on sort of broad-based economic recovery. I mean, we saw Q1 GDP, advanced GDP, come in last week at plus 6.4%. It was
which is
the
huge.
Yeah, I mean,
It's huge.
it's an impressive number,
Yeah.
and that beat expectations of 6.0%. So stronger than expected. It was driven largely by a 10.7% surge in consumption.
Wow. Wow.
People, are
Mhm.
buying, and they've
Yeah.
got extra dollars in their pocket, thanks to the largesse of of our government. Um,
Yes. Yes.
in fact, personal income rose 21.7%,
That's a projection.
21.1% in
Wow.
March. And, again, thanks to
Why
the
go to
federal
work, right?
government
Yeah.
for lining everybody's pockets. But
Oh,
apparently
yeah.
they're inclined to
And
spend
and
it.
they're
And
and they're going into the stock market, and they're buying metal, and, I mean, it's nice to see some of that money being invested,
other stuff, and and so it sort of feeds
Durable
that
goods.
whole inflation. Durable goods was like the only miss last week.
Yeah.
It only
I was
came in
just
at plus 0.015%, and they were expecting a really big number of plus 2.4%. So it
yeah,
was a pretty substantial miss on durables. Um,
but they
but
didn't clobber copper off of it, which I expected,
yeah,
you
yeah,
know? Yeah.
copper still looks good, and we'll get to that for
Yeah,
sure.
absolutely.
Just to wrap up on silver, I
Please do.
think you talked about photovoltaic demand last week,
Yeah,
reaching,
we went over slurry spray with silver, yeah.
yeah, so 101 million ounces last year um, was the offtake from silver, and that was despite an 80% drop in loading in photovoltaic cells, in PV cells.
Interesting.
Um, Impressive. That speaks to very strong demand for solar. Um, the Silver Institute also mentioned very specifically energy
Excellent.
storage is
Yeah,
expected to grow exponentially, and that plays into silver as well.
sure does.
So energy storage last year was at 4.5 gigawatts. It's supposed to climb to 10 gigawatts in 2021, and then 40 gigawatts by 2022. So
Wow.
huge growth
Wow.
in energy
We're
storage, and therefore silver demand for energy storage, and then of course electric vehicles as well.
as well, yeah, and we're twisting Matt Watson's arm and trying to get him on the show. He's probably one of the leading experts in the world on that, and he's a great guy. We're going to try to get him on the show in the next few weeks. So keep an eye out for that, because we'd like to get you some real exact numbers as to what's going to drive this market from the consumption side for the passage of electricity.
Yeah, so I think that
Yeah,
market looks really good. It did close down 0.3% last week, but it was up almost 6% for the month. It was the first higher monthly close in three. And even though it was an inside month, so the range was within the March range, I still like this market quite a bit, and price action in the gold silver ratio continues to support that in my mind. So that
good.
looks good.
All right.
PGMs.
BGMs. Have been interesting, Hey guys, guess what? Palladium threw $3,000. We've only been telling you it had that potential for a year, and we are there. And if you don't think it's going to pull platinum up with them, I believe that you're wrong, because they're going to try to start doing replacements with platinum for palladium in as much stuff as they can when you see 30 to 40% in the spread.
Yeah, absolutely. And
Yeah,
so, in fact, Palladium was up 2.7%
there you go.
last week. It was the third consecutive higher weekly close. We did set a new all-time high of
Yes, we did.
$3,008. It was up 11.9%, almost 12% for the month of April, and it was the third consecutive higher monthly close. Um, as you mentioned, supply deficit,
Yep,
um, improving
absolutely.
auto demand,
Yep,
increased AutoCAT loading as a result of higher and higher emission standards, all play into this bullish scenario for palladium. And
yep.
then, as you mentioned, platinum has been a little bit of a disappointment because,
Well,
it was down 2.5% last week and up less than 1% for the month of April.
which is
And
strange because I just got the numbers this morning from Impala Mines, which is a South African producer, biggest producer, platinum, and they are doing 367,000 ounces year on year versus 402,000. So the number keeps going down on production with the blackouts and shipping problems with COVID and machines and fuel problems. I don't get why platinum isn't significantly
yeah,
higher.
yeah, and that's been throughout the palladium rally. There's been consistent talk of substitution, platinum for
Yes,
palladium substitution,
well put.
and it never really happened.
And you're right.
I speculated that a lot of it had to do with the moving goalpost of emission standards, um, but um, but again, the spread is huge at this point, and there
Yeah,
there is definitely advantage in going with platinum over palladium. Platinum is a tight market as well. There's a
yes, it is.
supply deficit there as well. So it does seem like platinum remains undervalued at this point, and so I think that the potential for substitution is an underpinning of the market.
Yes,
So while it's not performing as I might expect on the upside, I think the downside is probably pretty limited. It dropped back to the trend line. Um, you'll see on the chart that there's a symmetrical triangle that we broke out of. And so it dropped back
okay.
to the low end of that triangle, found support there, and then firmed up, somewhat off of that. But again, sort of weak on Friday last week.
But I
Um,
think to quickly address that, what we call retooling, where remember, this is all about R values, how fast electricity passes over an object, and in a lot of cases, also in mitigation of NO2 and in pollution environments. And platinum has very good usage there. So, it, the retooling is this breaks down to, moving into a different compound. I've heard as much as 6 months for some products and as little as 3 months. So the question now is, how soon are we going to see retooling, or are people retooling to use platinum versus palladium? I think it's going to prove to be very interesting.
Yep, I agree. And like I said, I think the downside's probably pretty limited in platinum, certainly
Yeah.
as long as palladium's on the bid. So buy the dips is probably the most prudent strategy.
It's like he's singing to the choir, baby.
Let's move
Let's
on to
do
Dr.
Dr.
Copper,
Copper. Hey, hey,
up
hey.
2.8% last
Yes,
week,
sir.
fourth consecutive higher weekly close.
Yep.
Um, let's see, set a 10-year high of $4 55 cents. 455.26 was the actual
There you go.
high. So a 10-year
That was
high,
amazing number. 10-year
up
high.
up 11.1% for the month
Wow.
of April.
Just
Um,
amazing.
so yeah, on fire. There are a lot of headlines this week that we
There were
reached 10,000 per ton, which would
$10,000
be
a ton. Yeah.
which would be
That was,
$5 per pound.
yeah.
But we didn't quite reach $5 in the spot market. So
No,
those articles were talking about the futures market, and
correct.
but big threshold for sure to
Well, China's still a major consumer. They're going great guns over there. Their economy is really cranking. some interesting news coming out of Chile, which really is where the majority of your copper is coming from, and your copper ore. The government decided that they were going to put a 3% tax on all minerals. They just, oh, by the way, we're going to take 3% of everything that you're doing. And it's refined product. So now, after they mine it and then smelt it, then they're going to decide what the value is, and they're going to take 3% of it. And that's going to be an interesting little fight. And we're still looking at the possibility of the dock workers walking off and shutting down all the ports, which means we're shipping no copper at all to China, which is going to be really interesting. So lots of big headlines, Pete.
Yeah, and the market still looks really strong. I mean, you could
Yeah,
argue that it's overbought, and that's happened numerous times throughout this rally. We get modest setbacks at best, and they're
yeah,
bought up in a hurry. So yeah, I'm
yeah.
still looking at $5
Okay,
in the spot market on
you can't
copper,
argue it.
and perhaps even a little bit more. So that all looks good. Let's look ahead to this week real quick.
Okay,
We do have auto sales out Monday.
that's a big number.
The expectation is 2.7 million autos
Oh,
and
that's a lot.
10.6 million trucks. Factory orders on Tuesday. Market is looking for plus 1.2% versus minus 0.6% in March. And then Friday, Jobs Friday.
Jobs is going to be the big
Market's
one
looking
too.
for non-farm payrolls of plus 950,000.
Okay,
Solid
that's a
number.
realistic number. Yeah,
Yeah, and as I mentioned earlier, they're expecting the jobless rate to drop to 5.8% from 6.0% in March. So again, that would be reflective of I guess continued improvement in the economy.
I don't know anybody who's not hiring. I mean, we just had one of our major scrappers who's with us. I had a talk with him, and he said, "Pete, I just lost one of my drivers. I can't find anybody." He goes, "You know, can you find me a truck driver to move scrap for me?" Says call anybody, and I did. I reached out to some of our guys and said, "Hey, I need a trucker," and they were like, "Best of luck." I was like,
Yeah,
"What?"
they're particularly hard to find these
Yeah,
days.
I
So
mean, there's good paying jobs out there. You want to push a rig and really get a nice pension and some good dough. I mean, they're offering. So
yeah,
I mean, anybody who's sitting on the sofa, if you can push a rig, I'd get out there because these guys are paying top dollar right now.
yeah, it's a fact.
Yeah,
Well, with that, I think we've covered everything. And
terrific.
so again, please subscribe to our channel.
Yes,
Give us a
give us a
like on the
like
social
while you're
medias.
there. Yep.
We're everywhere: Facebook and Twitter and YouTube,
Oh, yeah. Yeah.
LinkedIn. You can
LinkedIn.
find
Yeah.
us.
Yeah, and as you can see over the last year or two, we have some pretty good insights from the consumption side. We're not traders, but we do give you some good insight, which hopefully will help you with some decisions down the line.
Absolutely. With
Yep,
that, I'm Peter Grant with Zaner Metals in Denver. Have a great week.
same here, guys. Thank you for dropping in on us. Take care.